and it would ensure that those corporates begin with clean balance sheets. Assessments. Credit unions work with two different funds. The Share Insurance Fund, which has long insured deposits at natural person credit unions, and the Corporate Stabilization Fund, which NCUA created with the approval of Congress in early 2009 as part of our efforts to solve the problems facing corporate credit unions. Recognizing the difference between the two funds will help you envision the reasoning we may use in announcing our future assessments. Last year, when we announced a single sum as the annual assessment, that was actually a combination of payments for the Share Insurance Fund and the Corporate Stabilization Fund. This month, the NCUA board plans to consider whether we should separate the assessment for the Share Insurance Fund from the assessment from the Corporate Stabilization Fund. That separation would not increase the total amount of assessments, but it would clarify exactly what each assessment is for. The Share Insurance Fund assessment for losses at natural person credit unions, and the Corporate Stabilization Fund assessment for losses at corporate credit unions. Separating these two assessments would be intended to improve the transparency of NCUA's assessment process and at the same time improve the accuracy of credit unions' budget estimates. A few months ago, at the request of the credit union industry, NCUA projected the total assessment to be between 15 and 40 basis points. In speaking to credit union audiences across the country, I have repeatedly advised them that I believe it would be prudent to budget on the high end. Mergers. A concern exists that well-managed credit unions are not included in the merger consideration process and are unable to grow because of that exclusion. Some believe the procedures used to consider merger candidates are not clear, resulting in a distrust of how the system works. Some feel there is an inconsistency across regions, leaving them to believe that mergers are steered to certain credit unions, while other qualified candidates are not made aware of opportunities. Although some mergers require swift action to maintain safety and soundness, others do not, and should be open to interested bidders. NCUA has recently committed to review, improve, define, and implement changes where needed to make the process open and competitive. Private insurance. Federal law does not mandate federal insurance for all credit unions. 9 states allow state charter credit unions to choose either federal or private insurance to protect their depositors' funds. Federal law allows federally insured state charter credit unions to convert to private insurance upon following the proper rules of disclosure and member vote. Likewise, privately insured credit unions can convert to federal insurance if they meet the required standards. Both federally and privately insured credit unions have struggled in this poor economic climate. News articles have documented the problem and highlighted the concern for those who believe all deposits in credit unions should be backed by the full faith and credit of the federal government. I believe that proponents and opponents of private insurance all would like to see private insurance remain strong during this crisis period. Weakness of any credit union in some way impacts every credit union. Be it a loss to the insurance fund or just bad publicity, negative consequences hurt us all. I am pleased to say that NCUA has an open line of communication between them and the private insurer. Respectful of the confidentiality required by contract or law, information is exchanged on an ongoing basis and shared among the insurers and state supervising agencies. That cooperation will continue because all parties involved have a mutual goal: the continued health and success of all credit unions. NCUA audits. NCUA is engaged with 2 firms to ensure transparency of the agency's soon-to-be-released financial statements. Shortly after NCUA established the Corporate Stabilization Fund, rules were issued governing the presentation of commercial financial statements. Today, accountants have differences of opinion on how to interpret these new rules and whether or not they apply to federal regulators. The delay is in no way related to the health of the National Credit Union Share Insurance Fund. The fund remains strong, and as reported at the most recent NCUA open board meeting, the Share Insurance Fund's equity ratio remains well within the normal operating range, while the Corporate Stabilization Fund remains well positioned to assess the cost of corporate losses over time. Consumer Protection Agency. Congress continues to struggle on what the CPA should look like, who should be covered, and what type of examination or reporting requirement there may be. NCUA, however, continues to move forward with the establishment of a Consumer Protection Office within our own agency. It is our hope that all credit unions would be under our jurisdiction on this most important issue. We are confident that the majority will. While we wait for Congress to act, we will put in place the procedures and mechanisms that will need to establish a model consumer office for financial regulators. Credit unions have always been consumer friendly. Our efforts will keep that in place and keep our credit unions a step ahead of other financial service providers. Community charters. For years, credit unions have worked to expand their field of membership, have been required to submit binders of material to NCUA to justify the changes requested. Staff and board members have had to read through hundreds of pages of paper. Chairman Matz has said enough is enough. There has to be a better way, and there is. Comments have now been received on proposed rules that we believe, when finalized, will make it easier and faster for community charters to be approved. State budgets. Never before have so many states experienced the deficits we are seeing across the country. The loss of revenue and jobs, the closing of plants and businesses, and the rising cost to provide needed services for their citizens have led states to slash their budgets, reduce agency staff, and put in peril the delivering of critical needs. One group impacted severely by these cuts has been the agencies empowered to regulate and examine our nation's state-chartered, federally insured credit unions. Some staff of those agencies are operating on a bare-bones budget with no money to hire additional staff and in some cases to maintain the staff they have on board. NCUA and state supervisors, along with NASCUS, their national association, maintain an excellent cooperative relationship. We are working with them to provide help in those states where it is needed. NCUA has a responsibility to lend our resources and support to ensure that all federally insured credit unions are determined to be safe. Through a cooperative state and federal effort, that goal will be accomplished. These are just some of the things that need to be fixed. They need to be fixed so that we can do things better. I have consistently told credit union audiences that we can only get better through a cooperative effort. NCUA and the industry are communicating better than ever. That communication, your involvement, your input, and your vision for the future must continue to be part of our cooperative effort to solve the problems we face. 100 years of hard work have gone into becoming the nation's premier financial service provider. That is what credit unions have achieved. That is what credit unions must strive to maintain. You are the best because you work to be the best. I ask your continued commitment to preserving and making the credit union system stronger than ever. You must continue to tell the credit union story of outstanding service to 90 million Americans and to work cooperatively on the problems we all share. Together we have built a truly tremendous and beneficial system. Together we can solve our present problems and move on to an even brighter future. Thank you for listening.